Welcome to the Transparent FX Academy. I'm Nick and I'm a top podder on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong historical structure resistance area for this market. In fact, from here, all this previous rejection to the downside was created. Again here, the market tested its zone and rejected it to the downside, and we can see how lately the market has once again tested the area and already started rejecting it to the downside. Now, in a situation like this, we could expect more bearish price action to be developed away from this area. So on the monthly, everything is looking quite bearish. Dropping down on the weekly time frame, what do we have? Well, from a weekly perspective, we have to first of all focus on the patterns that the market has been creating. Now, from here, we had the start of this move to the upside with a very strong impulse. After that, we had the creation of an ascending channel. Now, if we have a very strong impulse and then the market starts creating an ascending ascending channel, which can easily be identified by using these two trend lines, essentially, you have the creation of an exhaustion pattern, because an ascending trend line after a very strong impulse is an exhaustion pattern. The reason being, and the psychology behind this pattern is quite clear. If we look at the movement here, clearly buyers were in control, creating a massive swing to the upside. However, starting from this moment, every time the market created a higher high, new sellers came into this market. Most of them probably because they saw the resistance that was there on the monthly time frame. So that creates an exhaustion pattern, because it means that buyers are losing their control over this market, and at some point the market is supposed to be rejected to the downside, which is in fact exactly what just happened. So in a situation like this, we could expect a bit more bearish continuation away from this zone. Dropping down on the daily time frame, what do we see now here on the daily? First of all, I did speak about gold quite a few times in the past. I spoke about gold when we were here. I explained all the reasons for which we could expect this rejection to the upside. Then we had this impulse and correction, and from here I made another breakdown explaining all the reasons for which we could expect the creation of this move to the upside, a correction, and then the creation of a higher high before then being rejected to the downside. And that is in fact exactly what the market gave us. And by the way, I will link in description that all these previous analysis, so you can go and check them out for more free education. Now, in a situation like this, where we just had the creation of an impulse, correction, and continuation to the downside, which is exactly what we wanted to see from our previous analysis, we essentially have the creation of new daily structure. Because now, if we zoom in, it is quite clear to understand how this previous level of daily support, which was still acting as support here, now that the market has broken it to the downside, all this previous support is currently acting as resistance. We can also notice that since we have an impulse to the downside, and now the start of this correction, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse leg. Now, if we do that and we take our Fibonacci from the high to the low, what we can see is that we have a 0.32 and 50% Fibonacci retracements, which are currently lining up perfectly with previous daily support, which is now turned resistance. Now, this creates confluence of resistance given by the 0.32 and 50% with the structural resistance level that we could in fact expect the market to go and test and then to reject to the downside. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. What we can see here, if we look at the data for gold, is that with the last reports, net positions have been decreasing. In fact, if we look at the long term, we went from 98K net positions all the way up to 195K net positions, showing how institutions were increasing their longs, going from 208K all the way up to 266K, and the shorts were clearly getting decreased. The high was at 117K net positions and slowly getting decreased, reaching the low around this area here at the 66K short positioning that they had here. However, what we can see at the moment is that from the 66K shorts, they have now increased their overall shorts to 75K. And if we look at the longs, we went from 266K longs to 236K longs. So inside of this monthly supply and resistance area that we have identified at the beginning of the video, institutions have been decreasing their longs and increasing their shorts, therefore decreasing their net positions from 195K to 106K. Now, this is quite bearish, meaning that more bearish continuation is definitely a possibility. So there is a possibility here for the market to reject the confluence of resistance that we have just identified here on the daily time frame, and for the market to continue creating lower lows and lower highs from a daily perspective. So if the market will go and test this area, how we could be approaching a potential move to the downside away from this zone. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to a bearish market and provide to us one of our valid entries, at that point we could be looking for a potential move lower for the market to complete this impulse correction and impulse pattern to the downside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront cost of the mentorship program from $497 all the way down to only $97 one payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if you open an account with them from your student dashboard after you join the program, you can get a full refund credited back into your trading account. And if you scroll lower here, you will see that there is still time to join before the offer expires and price goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. And I will see you in my next breakdown.